All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you. And the first thing that I want to talk about is Ethereum closes in on its long-sought fix to cut energy use over 99%, otherwise known as proof of stake. Users and developers of the world's most used blockchain have been wrangling with its carbon footprint problem for as long as it's been around. Now, they say several recent breakthroughs will finally enable them to drastically cut energy use in a year or less. So basically talking about proof of stake. Proof of stake is coming a little bit sooner than expected, although with Ethereum development, which is notoriously slow, although good, notoriously slow, it may not. So Vitalik Beef wants to basically come out with proof of stake by the end of this year. So in December of 2019, or excuse me, of 2020, we saw the initial actual staking contract come out, the phase 0, if you will, and they needed such and such ETH in order to begin Ethereum phase 0, and that actually happened pretty quickly. And it was supposed to be something like a year or 2 years until proof of stake would come out. They were estimating 18 months. Then along comes incredibly high Ethereum fees, and miners were sort of revolting against the idea of EIP 1559 coming out. And the last time I checked, a week or so ago, the Ethereum blockchain explorer, there was something like 7 or 9 extra Ethereum just in fees. You're supposed to get 2 Ethereum per block reward, but there was literally 7 or 9 Ethereum in fees. So if EIP 1559 was out, though that 7 to 9 extra Ethereum would be burned. So therefore, Ethereum would be quite deflationary indeed, as there would only be 2 created and all of a sudden 7 or 9 of them burned. So pretty deflationary indeed, and it would absolutely skyrocket the price. But it would indeed affect miners because those fees aren't going to miners anymore. They would be burned. So there was a little bit of a revolt, and they said that they were going to move all of their hash rate to one particular pool in sort of a protest to show Vitalik Beef that they can sort of muster together and do such a thing. They didn't really threaten to 51% attack the network, but it is sort of an empty threat. Just the fact of you being able to do that sort of is a threat. And Vitalik Beef did not like that very much, and he says that he wants to essentially make proof of stake coming out sooner. So something like December of this year. Switching to proof of stake has become more urgent for us because of how crypto and Ethereum have grown over the years. Vitalik Beef, the inventor of Ethereum, said in an interview he's hoping the change is made by year end, while others say it will be in place by the first half of 2022. So not too much of a difference, but they did say 18 months in like December of 2020. So around that time, that's about a year earlier than was expected in December. So I'm definitely very happy that one of the biggest problems of blockchain will go away when proof of stake is complete, said Beef, who has been advocating for the shift since the blockchain was launched in 2015. It's amazing, he said. The change could help boost the price of cryptocurrency Ether, which is necessary to use Ethereum as investors who are environmentally conscious take note of its vastly smaller carbon footprint. Okay, I didn't like how that was worded so much, but you can see here, once again, I've been saying on my channel for the past like 10 videos that Bitcoin lately has been getting a bad rap for its carbon footprint. So this is something that people are caring about more and more and more lately, particularly like big companies and corporations. They sort of have this PR to deal with. They can't have this carbon footprint on their minds or on their books, as it might make them look bad to other investors. So that's why Tesla stopped accepting Bitcoin, and that's where our drop sort of began. And again, I think this is going to be a major problem in the future for Bitcoin. If Ethereum ever flips Bitcoin, it is because of its proof of work. And I'm not bashing proof of work. I very much enjoy proof of work and proof of stake too. But there is this narrative that is getting larger and larger as time goes on with the whole global climate change, etc. And, Bitcoin is just going to get a increasingly bad rap, if you will, for its carbon footprint. And this change to proof of stake isn't going to make too much of a difference in Ethereum until sharding comes along, et cetera, or EIP 1559 would make a big difference. But to investors, it is a good look, the smaller carbon footprint, as people care about that more and more lately. Now, even when I started YouTubing for crypto back in 2017, there were still articles about how much power Bitcoin takes. Even back then, they were considering it to be the size of a small country, the amount of power that Bitcoin takes. Now it's definitely probably a medium or a large country, how much power Bitcoin takes. And now a lot of miners, because of the whole Chinese mining ban, FUD, are actually packing up and trying to move out of China. And if they try to move to North America, I think that would even get a worse rap on how much power that they're taking. Because in China, it's a bit more subtle and it's a bit more disconnected from the rest of the world in terms of media, etc. And the power usage over there is a little bit more in the dark. And they are heavily polluted in China, but that sort of kind of goes with it in the sense that, like, well, they don't really care because of how much pollution there is already, and moving to North America may bring an even bigger light in terms of Bitcoin's carbon footprint. So moving on here, Vitaliks Beef with Elon's Dogecoin scalability plan, security versus scalability. So Elon Musk believes that a 1,000% increase to Dogecoin's block size will make Doge the leader of the pack, but Ethereum creator Vitalik Buterin does not agree, and neither do I. I was actually saying this a couple videos ago or something like that, Elon Musk was wanting to increase the block size 10x, block time 10x, or drop the block time 10x, and drop the fees 100x, but cryptocurrency really just doesn't work like that. If you make nodes too hard to use for the regular user, you lose decentralization, and there's sort of a triangular conundrum when it comes to the scalability. So scalability, security, and decentralization of a blockchain are very difficult to balance. You can only really balance two of them at a time. Vitalik took issue with Elon's claim that a massive increase to Doge's block size would scale the network to a winning level. The exact claim in question: ideally, Doge speeds up block time by 10x. So that would be basically making it, instead of 1 minute block times, 6-second block times, which is outrageous because a lot of the blocks would be completely empty. Increase block size by 10x, but again, that doesn't make any sense because then a lot of the blocks would be totally empty, and then drop fees by 100x. Then it wins hands down. So then miners lose a lot of money on that. And then blocks would be hard to propagate because every 6 seconds your computer would have to be working pretty quickly to do that. It just doesn't make any sense. So what is wrong with this picture? According to Vitalik, Musk's ideas about increasing block size failed to address the so-called blockchain trilemma, the inevitable trade-off between scalability, security, and centralization on blockchain networks. Just how far you can push the scalability of a blockchain? Can you really, as Elon Musk wishes, speed up block time 10x, increase block size 10x, and drop fees 100x without leading to extreme centralization? Vitalik posed at the beginning of his blog post. According to Vitalik, the answer is no. As it turns out, increasing scalability on a network is nearly impossible to do without leading to extreme centralization and compromising the fundamental properties that make a blockchain what it is. Why is this? Vitalik argued that increasing block size so vastly may make it impossible for the vast majority majority of Dogecoin holders to run full nodes, which is a factor that could lead to extreme centralization. For a blockchain to be centralized, it's crucially important for regular users to be able to run a node and to have a culture where running nodes is a common activity. Therefore, to maximize the number of users who can run a node, Vitalik argued that it is important to ensure that running a node is possible. To that end, there are 3 key limitations to full nodes' ability to process a large number of transactions. He said computing power, bandwidth, and storage. So, as it turns out, Vitalik argues that any full node, only 5 to 10% of CPU power can be spent on blockchain verification. In other words, full node operators must have much more CPU than is actually used on verifying transactions. If blocks are too large, the amount of required CPU power could grow astronomically, making it impossible for the vast majority of users to operate full nodes successfully. And this is something that Elon Musk doesn't get. Perhaps one day this could be a thing, but the problem is for the average node user, this is going to be impossible to do. And I was talking about this a couple of videos ago, and now Vitalik Buterin is basically saying pretty much the same thing. It's an absolute ridiculous. It's a very naive thing to just say, oh yeah, no, we're just going to speed up the block time by 10x, increase the block size by why not 10x too? It just seems very arbitrary and very naive, and then drop fees by 100x. It's silly, and it's the first time Elon Musk has sounded very, very silly, and usually he's very intelligent, and but in this case, I think he's a little bit naive on how it works. Moving on, Tesla and MicroStrategy are slowly losing their Bitcoin shine. So speaking about Elon Musk, I suppose, the high-profile coin purchases by corporate entities like MicroStrategy and Tesla were credited in part with pushing up the price of Bitcoin through the end of 2020. Allotting billions of dollars worth of Bitcoin to their balance sheets had a knock on the effect of stock prices of Tesla and MicroStrategy, both which were subject to 348% and 808% pumps, respectively, from the moment their CEOs began stacking Satoshis and posting crypto memes. But the glow afforded Tesla and MicroStrategy their headline-grabbing Bitcoin purchases proved to be short-lived. After the share prices of both stocks peaked in early February, MicroStrategy shed value on its way to 64% losses, and Tesla went on to experience its worst losing streak in 3 years after losing 36%. So Tesla shares were worth $580 on Monday, down from February's high of $880. MicroStrategy shares were worth $448, down from a high of $1,272. Comparatively, MicroStrategy was priced at $140 prior to its Bitcoin purchase, and Tesla shares were worth around $200 in mid-2020 when CEO Elon Musk began tweeting Bitcoin and Dogecoin memes in earnest. So they're still up. However, since they're tied to the balance sheet, if Bitcoin goes down, they go down as well. However, Bitcoin was going up and some of the shares were going down. So it hasn't really helped their company all that much. Although Tesla made, at the point when Bitcoin was something like 60,000, Tesla made something like $700 million, and I'm sure MicroStrategy made quite a bit because their average buy-in is something like $24,000 Bitcoin. So they made certainly billions of dollars. So they made a lot of money, yet for their investors, it didn't really work out too good, yet it kind of did. So, I mean, you can see here $140 prior to the Bitcoin purchase, and now they're worth $448, but down from a high of $1,272 stock for MicroStrategy. So a very odd conundrum here. So it has increased the price, has increased their balance sheet and their profits, but it's a bit short-lived, and it hasn't really had as big an effect as people may have think it had. And also Tesla, again, getting a bad rap because Tesla, the electric car maker, is buying Bitcoin, which notoriously uses a lot of electricity and has a carbon footprint. And again, we're seeing this over and over and over again, and it's more frequent. So once again, I remember like 3-4 years ago reading articles on my channel about Bitcoin's carbon footprint and how it uses as much as a city or a small country, et cetera, et cetera. It's been increasing ever since. But however, starting in 2021, we've started to see a lot of attacks against it, and I think it's a bad rap to pick it up. It's sort of like a celebrity that has fallen from grace, and now nobody wants to put them in their movies or something like that. Nobody wants to touch that. Nobody wants to touch this, that, or the other thing that is sort of like a cancel culture, almost like a carbon footprint. And I don't mean to say carbon footprints and climate change or cancel culture, but it's a bad look for companies because they care about their image and they have to maintain this exact square image. And I think it's going to have a negative effect on Bitcoin. And as we go into the future, we're going to see more and more and more of these. And I said this a month ago, and we're seeing even more of them. And I'll say it in 3 months, and we'll be seeing even more. Where when Ethereum goes EIP 1559, when they implement that, and when it goes proof of stake, I believe that Ethereum is really going to go through the roof, and it's going to be much more relative to Bitcoin's price than it is now. Due to its good look. Chinese Bitcoin miners abandon ship ahead of incoming crypto crackdown. So I talked about the crypto crackdown in China, and once again, it could be FUD, it could be fake, it could be real. However, in the articles that I was reading, it's really China is cracking down on institutional investors, sort of like group investors into a mining operation. So getting a whole bunch of millionaires to put down money to have a warehouse filled with ASICs. That's what they're cracking down on. Not necessarily if you want to put your millions into your own millions, I suppose is a better way to word it, into a big warehouse filled with ASICs. Not cracking down on some guy with a GPU rig in their house or even an ASIC in their house. It's sort of like an institutional crackdown on group investing, so that like massive groups don't lose money if Bitcoin goes under. Now, this could be for a greater reason for for them to squash Bitcoin. I've heard some people say that China's digital currency, the digital yuan that came out, so they're trying to push out Bitcoin and just to keep the digital yuan. So there's a lot of conspiracies around this. That could be true, they could be false, but either way, what is true is that a lot of Chinese miners are packing up and leaving. They're trying to go to North America or various other places, and once again, that's why I was talking about this earlier. If they go to North America, they're going to get the bad rap there as well. It's going to shine a bigger light on the carbon footprint of Bitcoin when people notice that their local power plant is, running at full capacity because of new miner operations. Another thing about mining operations is that they really don't employ very many people. You can have a few techs, tops, in a big warehouse filled with ASICs, and they just go around in shifts and take out broken ones, ship them back, put in new product, fix broken product, like by welding or soldering new chipboards on, etc., etc. Running cables. It's really a small operation, and it's not like a big factory that employs hundreds of people or something like that. So there's usually a lot of tax breaks for miners, etc. But I think the politicians are not quite aware of how much tax breaks they're giving to a company like this, a mining company, and really it doesn't employ anybody in the local area. Maybe a couple techs or something like that they might post an ad for to walk around and deal with ASICs, etc., but it's really not a big employment operation. So this is probably going to backfire in the future. Just remember, bookmark this one. Bitcoin's general downtrend continued on Monday morning, despite the coin showing a strong 17% rebound overnight. As the coin continues to nurse wounds from its recent 43% price drop, more turbulence could yet be in store. Several large Bitcoin miners opted to cease operations in China this past weekend, following the news that Chinese authorities were planning a crackdown on cryptocurrency mining. On Monday morning, 3 Bitcoin mining pools had announced plans to halt activities in China. BTC Top, which accounted for as much as 2.5% of the overall Bitcoin hash rate during the past week, said it would close up shop in the Chinese mainland and shift its operations to North America. Again, it's going to shine a light on the bad rap of Bitcoin. So, we're gonna see possibly a shift in sentiment against Bitcoin sooner or later here, just because of its carbon footprint, because of the tree huggers, because of the environmentalists. It's going to happen. I really feel this as more and more articles are really kicking up about its carbon footprint here. Huobi, cryptocurrency exchange's offshoot company Huobi Mall also announced on Sunday that it would no longer sell crypto mining rigs in China and that it would suspend its mining operations there. Meanwhile, mining company Hashcow said it would cease purchasing new Bitcoin mining rigs for the time being. So didn't really say that they're going to be packing up and leaving, but just they're going to stop purchasing Bitcoin mining rigs for the time being. Probably because they don't want to have to deal with moving them all if they have to buy new ones, and possibly the long-term downtime of buying new ones and then maybe having to actually leave the country. So it would cut into their profits. On Friday, Hong Kong authorities announced an impending ban on cryptocurrency retail trading in a move that would restrict trading to only accredited investors with more than 1 million in their portfolios. So 3 of China's major associations released coordinated warnings against cryptocurrency investing last week. Telephone hotlines were set up in Inner Mongolia to encourage citizens to report any crypto mining activities they may have witnessed. Bitcoin's hash rate, a measure of how much computing power is being aimed at the blockchain by miners, dropped 30% up to the commencement of China's recent spat of warnings. The hash rate fell from 171 exahashes per second to just over 118 exahashes. So, they want to try to remove retail trading too, but interestingly enough, I mean, they already removed Bitcoin exchanges. This was in something like September of 2017. We were at nearly $5,000 Bitcoin for the very first time. It's something like $4,900 and some odd dollars. And then China banned cryptocurrency exchanges, and that's why Binance moved to Malta, etc. And we dumped to like $3,200 Bitcoin, and since, of course, came back up. But now they want to do it again, essentially, and restrict any kind of trading. And now they have telephone hotlines to set up any crypto mining activities. So an article I read was talking about how they would really only ban crypto mining activities that was sort of like institutional or group investors, so that like the country as a whole doesn't lose money and investors don't lose money. But if you want to spend your own money, that's totally fine. Now I'm sort of reading that any kind of crypto mining activities they want to be reported to basically the state of China. So again, you can see how this shifts all around. When it comes to Chinese news, it's very hard to get the real story. Sometimes it's literally actually fake news, just a FUD on some coin to bring it down in price or what have you. Other times it can be real, but it can be just completely maybe lost in translation, perhaps, and also just misleading. Perhaps you only get half the story. So there's basically some real FUD going on right now in China. Actual cryptocurrency mining operations are picking up and trying to move out of the country. So that gives you some idea of how real this is. But to the extent of it is hard to say. Are they banning all cryptocurrency mining activities, or are they just banning sort of like corporate group investing mining activities? Hard to say. I'll keep up with this one, and we'll see where this actually goes. But for now, it has decimated the price of the cryptocurrency market. We were at $1.3 trillion market cap, which is great. But we were at something like $2.4 trillion market cap. So we lost $1 trillion at least in this recent dump over the past maybe couple weeks, week or two. And what's interesting about that is that in 2017, at the high of 2017, the market cap of cryptocurrency was something like $800 billion or $900 billion. It never quite reached $1 trillion. So we lost essentially more than all of 2017's entire market cap within a week or two. So a quite devastating blow to cryptocurrency in general because of Elon Musk / China combo FUD. 37,735 Bitcoin. We are coming back up. So I made a video 2 days ago and I was talking about how it doesn't look very good at the moment, that it looks like we're going to continue downward just a little bit. And we did. We reached something like 30,000, but then I was hoping that it would come back up quickly. And it is, although I didn't call it coming back up quickly. I was just hoping that I was going to be wrong about the long-term downtrend. But I did say that there was a definitive resistance level at like the 30,000 / 29,000 area where we had on several exchanges shadowed to from the candles, and it was pretty clear that there was a lot of people buying just as it dips under 30,000. So it was pretty clear to me that it wasn't really going to go below 30,000, but I was thinking we were going to stay there for a little bit longer. But it looks like we're moving back up. Like the entire market, you can see here, just this V shape, all sort of moving back up. So investors coming back in. Cardano doing absolutely excellent at $1.51. We did reach something like $2 Cardano, and then it dipped to like $1.09 or something like that. But then it snapped right back up. So Cardano, one of the most resilient cryptos of this recent dip. Ethereum's coming back up pretty quick as well, but it looks like we're doing okay. Binance Coin took back its spot above Cardano there as Binance Coin bounces up pretty quickly. But in the 24-hour period here, we can see 36% for Binance Coin, 29% for Cardano, etc. So many of these coins up 50% from the previous 24-hour period. So even Uniswap up 50%. So everything is snapping back super quickly here. Polygon up 70% from the day. It was like 100%, I think, earlier. But that's all I have for you guys. Make sure you like, subscribe, and share the video. That helps me out a lot. And my social media is in the description below. Give me a follow on those if you get the opportunity to do so. But that's all I have for you guys. Hope you enjoyed it. And as usual, I'll see you guys next time.